You ready to go? Okay. Let's just do it. No subway, exactly. Well, if everybody's ready, we'll get started. This hearing will come to order. Good morning. I'd like to welcome our witness, Secretary Jack Lew, Secretary of the Treasury. Today, we look forward to discussing the Department's own budget request, as well as some of the assumptions and policies included in the President's overall request for fiscal year 2017. Last month, we had a very lively discussion with OMB Director Sean Donovan about the debt generated by the President's budget. While there's more than one way to measure the size and the effect of debt on the economy, in the simplest terms, the President's budget spends more than it takes in, and that results in more debt. This debt is an economic burden that must be repaid by our grandchildren and their grandchildren, because the President's final budget does not address the unavoidable question of how to distribute the economic cost of an aging population across the generations. The federal debt in gross terms exceeds $20 trillion for the first time in our nation's history. It took 233 years to get to this first $10,000 in debt, and it only took 8 years to get to the next $10 trillion. And because of this, Mr. Secretary, I want you to think back during your first tenure as the OMB Director, and you predicted that the United States would be debt-free by 2013. Now, obviously, a lot has changed since then, but the formula for retiring debt has not. Spending as a percentage of GDP must be lower than its historical average, and revenue as a percentage of GDP must be higher than its historical average. And the budget before us, however, projects that both spending and revenue as a percentage of GDP will remain above the historical averages through 2026. In other words, this budget is a permanent source of debt. Growing along with the debt is Treasury's own budget request for the fiscal year 2017. The Treasury's Department is requesting a massive 12% increase, including $1 billion or 9% increase for the IRS. Instead of making some tough choices, it seems that Treasury proposes unrealistic increases, budget gimmicks, and new mandatory spending. I believe the IRS request is unrealistic. They have not received either a dollar or a percentage increase of that magnitude in the last 20 years. The IRS request assumes a discretionary cap adjustment that the budget committees have rejected for 5 consecutive years. In addition, the Treasury seeks to spend an additional $8.5 billion outside of the appropriations process. The request also proposes a new cybersecurity enhancement account to the tune of $110 million. Without a doubt, cyber threats are both real and they are serious. And the committee has been continually supportive of funding for cybersecurity as a part of agency's annual budget requests. However, I would caution the administration against the temptation to create an endless number of new accounts across government spending and calling that a cybersecurity plan in order to get new funding for an old problem. Make no mistake, we must harden our nation's information technology infrastructure, but it should be done with a critical eye. New programs with new names aren't going to solve the federal government's perpetually out-of-date, over-budget, behind-schedule information technology. I hope with the further discussion today we can find some common ground to work on together. As you know, a matter of great interest to me and concern to me is the Financial Stability Oversight Council's process for designating systemically important financial institutions, and in particular, non-banks. Following up on our conversation from last year, I hope we can shed some light on how FSOC has improved transparency with regard to entities under consideration for CFIC designation as we adopted last year. Another issue that is important I'd like to bring to your attention is that in the 2016 Omnibus, we required the SEC's Division of Economic and Risk Analysis to report back to this committee within a year of enactment on the combined impact of the Volcker Rule, Basel III, and other financial regulations, what kind of impact they've had on access to capital for consumers, investors, and businesses, and the impact on market liquidity. I look forward to reading that report later this year, but in the meantime, I hope we can talk a little bit about how you will work with the SEC economists if and when asked. I have serious concerns that the cumulative effect of these layers of regulations have resulted in an alarming lack of liquidity in the U.S. markets, particularly in fixed income markets. I believe we need to continue to monitor this issue closely, and I look forward to discussing these concerns with you today. And finally, let me say one thing about the omnibus last year. We included an additional $5 million for Treasury's alcohol and tobacco tax and trade bureau. That was to expedite the label and formula processing. And I believe that by appropriating these funds for the bureau, we can help countless small businesses that depend on the Treasury for approval of their labels and formulas to get their products to market. Mr. Secretary, I hope this funding makes it clear that this is a priority for Congress. I know it's a priority of our full committee's chairman, and I hope the Department will assist the Bureau in accomplishing their mission. So again, I want to thank you for taking the time to meet with us, Secretary Lew. Look forward to your testimony, but first let me turn to the Ranking Member, Mr. Serrano, for any opening statement he might make.
Thank you, Mr. Chairman. And I'd like to join you once again in welcoming Secretary Lew before the subcommittee to discuss the Department's budget request for fiscal year 2017. The Treasury Department plays a broad and important role in guiding our economy, ensuring a fair federal tax code, managing our nation's finances, promoting economic opportunity, and conducting important international activities. You provide assistance and leadership in a number of diverse roles, and I thank you for all your efforts. One area where your continued leadership is desperately needed is on the island of Puerto Rico. The Treasury Department has been playing a leading role in helping to address the fiscal and economic crises on the island. Last year's omnibus bill included language allowing Treasury to provide technical assistance to Puerto Rico to help it work on ways to balance its books and improve its economy. While this is a good step, and I hope we will discuss it today, it is clear that more needs to be done by Congress on this issue. The humanitarian toll this is taking on American citizens is truly appalling. The Speaker has committed to action, and I expect him to keep his word. And let me just mention that again, Mr. Chairman, because unfortunately there are too many members of Congress and the American people who don't know that everyone who was born in Puerto Rico is an American citizen. A significant contributor to the island's fiscal woes is its continued inequitable treatment under numerous provisions of both the federal tax code and the federal grant programs. Your budget request proposes to remedy one of these issues by creating a mandatory funding stream that would essentially allow working families in Puerto Rico to receive the Earned Income Tax Credit, something that no one living on the island is currently eligible for. I commend you for this proposal and believe it will provide some relief to families on the island. Beyond this vital issue, your fiscal year 2017 budget request includes new funding for the Community Development Financial Institutions Fund. The CDFI fund has helped entities invest billions of dollars in economically underserved areas, including in my district in the Bronx. I commend you for a new initiative proposed within this program this year, the Small Dollar Loan, which will help reduce reliance on the payday lenders. Access to mainstream financial services is a serious problem in the Bronx and elsewhere, so I think this new effort has a great program and a great potential. Now, as I've said to you privately and publicly, this CDFI is a great program, and to strengthen it is really going in the right direction. Your budget request also builds on last year's increases for the IRS, providing for further investment and to try and better address enforcement and service priorities. Although I am pleased that we were able to get a significant increase for the agency, the IRS has still lost thousands of employees over the past several years, and its budget is still 19% below fiscal year 2010. These reductions have made it significantly more difficult for the agency to help those with questions and to go after tax cheats. Your budget request helps restore capacity at the IRS, which is important in ensuring the fiscal health of our nation. Lastly, I do also want to mention the Department's central role in reforming our policies towards Cuba. Treasury issued new travel regulations yesterday in advance of the President's trip there, and I hope we will get a chance to discuss these further. The impact of your department's policies in all of these areas show just how central the Treasury Department is to our nation's economy, our government's fiscal health, and our community's economic opportunities. I think the department has done a great job in all of these areas in the past 8 years, and I want to commend you, Secretary Lew, for a job well done over the past 3. If I had the ability to keep people around for the next administration, you would be at the top of my list for many, many reasons, but I didn't win any other primaries, so I'm not involved in this. But I just want to finish up by saying you've been a great friend of the Commonwealth of Puerto Rico, and any help that you can continue to lend, because it's sad, and it's sad that the public is not aware of what is happening. And as you know, anything that happens in Puerto Rico affects Wall Street, affects New York, affects the United States, where there are 5 million Puerto Ricans living, and they are part of who we are. They're part of the system. I was born there, as you know, and the most important point to me is that the suffering is affecting veterans in Puerto Rico at the veterans hospitals and elsewhere, and at the minimum, we should stick to our word that we never turn our back on veterans, and those veterans in Puerto Rico are as much veterans as there are anywhere else in the country. So I thank you for your help to the whole island, and especially to the veterans. Thank you. Thank you, Mr. Chairman.
Thank you. And our chairman of the full committee, Mr. Rogers, is en route. And when he arrives, if he wants to make an opening statement, we'll recognize him. But right now, Mr. Secretary, we recognize you for your opening statement. If you could keep your remarks in the neighborhood of 5 minutes, and you can submit your full statement for the record, but please proceed.
Thank you very much, Chairman Crenshaw, Ranking Member Serrano, members of the committee. I appreciate this opportunity to testify on the Treasury's 2017 budget request. Thank you for the kind words, Congressman Serrano. But as I hope you can understand, I look forward 10 months from now to living full-time in the Bronx again. Since my testimony last year, our economy has continued its record-breaking streak of private sector job creation, which has reached 6 consecutive years and 14.3 million jobs. Over the last 2 years, we've experienced the strongest job creation since the late 1990s. At 4.9%, the unemployment rate is half of its 2009 peak, and we continue on a sound fiscal path. From fiscal year 2009 to 2015, the deficit as a share of GDP fell by almost 3/4, from roughly 10% to 2.5%. And, Mr. Chairman, I appreciate your comments about the performance of the budget during the years that I was OMB director in the 1990s. And I did, in 2001, project a surplus of over $5 trillion for the upcoming 10-year period. Obviously, policies changed after that, and when I came back to OMB, it was a very different situation because the money had been spent on things like tax cuts and new benefits and wars, and then we had a financial crisis. What this administration has done is put our country back on a path of fiscal responsibility, and I look forward to having a chance to discuss that. The passage of the omnibus spending bill in December has helped really build on the momentum in our economy now. It's really contributed to economic growth, and it's also helped us rebuild our international leadership. The agreement, I think, in another way demonstrates that we still have the capacity to find common ground on difficult issues. It lays the foundation for addressing some of our long-term challenges. But there's a lot of work that still remains, and that's why this year's budget includes critical investments in both our domestic and national security programs. Treasury's 2017 budget makes investments in cybersecurity and infrastructure and financial intelligence activities, including efforts that are directed at ISIL. It also includes strategic investments in the IRS so that the agency can return to providing the level of customer service and privacy protection that Americans expect and deserve. And it supports investments in America's small businesses and distressed communities to help grow the economy and ensure that all Americans benefit from growth. Finally, the 2017 Treasury budget makes a number of investments to support the ability of both our domestic and international offices to further Treasury's mission. Cybersecurity is an urgent challenge facing the country and the Treasury Department. Our budget proposes a new $110 million department-wide cybersecurity investment account to enhance IT management across our bureaus and improve our ability to protect against and respond to cyber threats. The proposed investments will enhance electronic authentication procedures for access to Treasury digital services, expand existing security systems on internal networks and public websites, and safeguard data across the department. The FY 2017 budget also includes strategic investments in the IRS to improve service to tens of millions of taxpayers, to reduce the deficit through more effective tax administration, and to provide privacy protections that Americans expect and deserve. I appreciate the increase provided by Congress in FY 2016, but as many of you are aware, the IRS remains severely underfunded. Despite its crucial role in growing responsibilities, the IRS budget is nearly $1 billion lower than it was in fiscal year 2010, while the volume of income tax return filings has increased by nearly 7%. Budget reductions at the IRS cost the country billions of dollars each year in lost revenue, contribute to inadequate customer service for taxpayers, and leave necessary cybersecurity protections underfunded. A sustained deterioration in taxpayer service combined with diminished enforcement capacity could create serious long-term risk for the U.S. tax system. Our request provides a $530 million increase above the 2016 enacted levels. With these investments, the IRS will increase staffing for traditional taxpayer services, improve the quality of assistance available to taxpayers who call the IRS, and bolster defenses against stolen identity refund fraud. In FY 2015, full-year telephone level of service plunged to just 38%. With the additional funding that we received in 2016, we expect to reach 47% this year. And with full funding in the 2017 budget, we could bring that level back to 70%. The budget also invests in new IT architecture that will enable the IRS to continue to modernize and secure its online services and provide taxpayers with an experience comparable to what they've come to expect from financial institutions. Treasury's request also proposes an additional $515 million increase through a program integrity cap adjustment to increase enforcement of current tax laws, investigate transnational organized crime, root out abusive tax schemes, and enforce the Foreign Account Tax Compliance Act, FATCA. These targeted investments are expected to return roughly $6 to the government for every $1 invested and reduce the deficit by $46 billion over a 10-year budget window. In FY 2017, Treasury outlined key investments in evidence-based programs that will support America's small businesses, working families, and distressed communities. I'd like to focus on one in particular. I share the concerns that Congressman Serrano raised with regard to Puerto Rico. And I very much appreciate the committee's inclusion of Technical Assistance Authority for Puerto Rico in last year's funding bill. But more does need to be done. Puerto Rico's economy continues to suffer. Its unemployment remains above 12%, its debt is unsustainable, and outmigration continues to accelerate. The administration has proposed a comprehensive plan to address Puerto Rico's financial challenges, and we encourage Congress to act with the haste that this crisis requires with legislation that will allow a financial restructuring along with new oversight, neither of which cost any taxpayer dollars. The budget also proposes a $600 million annual allotment indexed to inflation to create a refundable, locally administered earned income tax credit for residents of Puerto Rico. Unlike Americans living in the 50 states and the District of Columbia, residents of Puerto Rico are not eligible for the EITC, and it would increase employment in Puerto Rico's formal economy as well as improve the Commonwealth's tax compliance and tax revenue. Finally, the FY 2017 Treasury budget makes a number of investments to support the ability of both our domestic and international offices to further Treasury's mission. While not under this subcommittee's particular jurisdiction, I want to highlight Treasury's international programs budget request. It provides a cost-effective way to promote international financial stability and to continue U.S. leadership in international development, advance national security, and expand export markets for American businesses. In closing, I want to take the opportunity to thank the talented team of public servants at the Treasury Department. I'm proud to represent them here today, and on behalf of these hardworking men and women, I want to say how much we appreciate the continued support of this committee. Thank you very much, and I look forward to your questions.
Well, thank you, sir. And we'll start with the questions, and we'll observe the 5-minute rule if we can, just so we can have everybody ask a series of questions. I think we'll have time for another round after that. But let me start, Mr. Secretary. I mentioned in my open statement about this new agency called FSOC, which you're the chairman of. And as you and I talked last year about one of my concerns that there's not a lot of transparency in this whole designation process. And I think your point last year was, well, it's really, it's kind of a binary decision. We either designate somebody or we don't designate somebody. And I guess the question becomes, isn't it more important to mitigate the risk than it is to simply designate someone? And so this subcommittee last year adopted some language that I proposed to say before you go out and designate someone, you would maybe let them know what FSOC thought the potential problem was, give them an opportunity to understand what the problem is, and give them an opportunity to actually de-risk or cure that problem. And still, FSOC would have the final authority as to whether to designate that institution as a SIFI or not. And particularly in terms of non-banks, it's understandable more so in the big banks, the too big to fail concept. I think that's what gave rise to this whole SIFI designation. But when you get into non-banks, life insurance companies or asset managers, this lack of transparency is still a concern, I think, to me and to this subcommittee. So talk a little bit about that. I mean, isn't it more important? We want to have an economy, we want to have a capital markets that are safe and secure, and that's more important, mitigating the risk there, than simply designating people either a SIFI or not a SIFI. Wouldn't you agree that really is the goal?
Mr. Chairman, the goal of FSOC is to keep an eye on risks to financial stability and to, when necessary, designate firms for a level of scrutiny that's appropriate to the level of risk that they present. Since we talked last year about this, and we've had some conversations in the middle, we've actually taken steps to provide more information earlier in the process to entities that are being reviewed. We have very intense back and forth conversations with them. They know exactly what the analysis is. They present a lot of information. And there are not dozens or hundreds of non-bank designations. There's less than 10. And they're firms that are very large firms. They're amongst the largest financial institutions in the world. And I think we all have to remember that the financial crisis didn't begin exclusively in regulated banks. It actually had its roots in part in some non-bank financial institutions like AIG, which was designated early on in the process. We have gone through the process listening and learning as we go along. I think we've been very prudent and made only a very small number of designations because this is not an authority that should be seen as potentially a risk to small small institutions that don't present the kind of financial stability risks that FSOC was meant to keep an eye on. I'm happy to continue the conversation. Obviously, FSOC is still a young organization. I think it's performed very well and very prudently. And I think we're in a better place today because we have more visibility into these very significant institutions that are now scheduled to be reviewed in an appropriate way.
Well, you mentioned that you're having those conversations, and particularly in terms of the non-banks. And there was, I know life insurance companies have been designated. There was some concern that some of the asset managers, and the question would become what risk they posed overall in terms of their other people's money that is being invested. They don't seem to pose the same kind of risk. But if you're having those kind of conversations, do you agree that the language we added last year, does that make sense in the sense that as you move forward in these discussions, that you would come to a point where you would give credence to that language to say, we'll sit down with you if you're having those discussions, and if these are areas of concern, I want to make you aware, Mr. Institution, of those concerns, give you an opportunity to kind of look at them and say, maybe we can help mitigate that risk, and if so, does that make sense to have that kind of process so that before you just designate them, you at least let them know? It sounds like you're trying to do that now, but why not codify that so that it gives them some I guess, some comfort that they're just not going to wake up one morning and somebody said, well, you're now a SIFI.
So I think that the way the process works, there is a great deal of visibility into what the analysis is. And in each of the firms that have been designated, the issues are core to what the businesses are. So it's not as if they're small kind of bolt-on businesses that if you sold this small business, it would change the fundamental shape of the firm. I don't think that there's a mystery as to why the firms were designated. Some firms may choose to restructure their business activity because it's in their business interest to do so. We already have seen one of the designated firms, though they have made the case that it's not at all because of a desire to get out of the SIFI designation, it's because of a core business decision to separate, become a manufacturing company, not a financial services company. That will be reviewed by FSOC fully transparently to the company in the next year's review if those transactions go forward. So I don't think there's a lack of transparency or a lack of information. What I think we do have to be careful about is creating more procedural hoops and potential delays. It's roughly a 4-year process from the beginning to the end for a designation. I think that a financial crisis doesn't give you 10 or 20 years warning. I think we have a process that's very deliberative, very thoughtful, very iterative and interactive with the parties that are being reviewed. And I would be very cautious before putting any overlay of new procedural requirements that become the basis for delay or prolonging the process. There is one party that has challenged the designation in court. That will be resolved by a court. That's how the law was set up, and the court will decide. But I think to add additional procedural hoops would frankly put us at risk of missing a target for designation when it's timely to prevent a problem. And as I said in my initial response, it's not like there are dozens or hundreds of firms that are on the edge of being designated. This has been used very judiciously for only the very largest firms, and it's a very long process that permits a great deal of visibility by the party that ultimately is subject to review.
Well, it seems like then we tend to agree that it gives you, both FSOC and the institution, an opportunity to mitigate that risk. That's what it sounds to me like. That's what you'd like to see happen. You may not want to write that down, but that's what you're doing today. Is again, it's important to mitigate risk, not just to designate. You'd say, look, if you can mitigate the risk, that's probably better than just getting designated and staying there forever. Which brings up another question, just very briefly. After somebody's been designated a SIFI, is there any way to get undesignated a SIFI? Yeah. Because once again, it seems to me, from your standpoint as the regulator, what you'd want to do is to say, if there's some risk involved, we want to tell you about it, we'll designate you, but we'd really rather you mitigate the risk and not be designated. And so I wonder, will there ever be a way to get undesignated if all the mitigation takes place and the risk is gone away? There's an annual review of each designation based on submissions made by the designated firm, and that is a real review. So has anybody ever been undesignated? No one has been undesignated, but I think that there is a full understanding that if there's a material change in the business plan, the basis for being reviewed and for the designation being reviewed is very real. We haven't seen something come up for review where there's been a significant change in the business plan. I anticipate that may well happen in the coming period of time. It's not our job to decide what the size of the firm should be. That's a business decision the firm makes. If their level of risk goes down on review and they don't meet the threshold, that's a basis for deciding the designation shouldn't go forward. So we don't start out with a desire to have more firms designated. We start out with the mission mandated by the Act for us to look at whether there are significant risks to the financial stability, and if so, to make the appropriate designations. I think that it has been used in a very cautious way, and it is something that we can be proud that we have now created the ability to see what's going on at firms that are large and have that kind of a systemic impact. If firms change their business plan and are no longer presenting that kind of a profile, we would review it and make a different judgment.
But that's the process. It exists, and I don't know whether it will be in my tenure because we're in the last year. But I have full expectation that if there is a major change of business plan, it would be reviewed, and that determination could go one way or the other.
It sounds to me, I'm encouraged to hear that. I think when the FSOC got created and you became the chairman, nobody knew exactly what was going to happen, and I think some of the early indications, early actions were that all you can do is say yes or no. And now it sounds to me like there's an evolution of a process, and we're just trying to help bring that along. And if there are proposals to write that down that don't kind of get in the way of the overall regulation, we hope we can move in that direction. So thank you for that. And now I'd like to turn to Mr. Serrano.
Thank you, Mr. Chairman. To your surprise, I actually understood that argument. It got a little interesting for a while. I thought we were talking about designating minor league ball players back to AAA or something. But, Mr. Secretary, let me bring you back to what, is taking so much time, and rightfully so, in my community, both in New York and in the Commonwealth of Puerto Rico. We gave you, in trying to help, in the omnibus bill, we gave some technical assistance language, including economic forecasting, budgeting, cash management, spending controls, information technology upgrades, multi-year fiscal planning, revenue and expenditure projections, improving tax collections, and grant management. What are you doing with that new authority? What progress has been made? And is there any new authority the administration needs and is looking for?
Congressman, as you know, before that authority...
And I want to take this opportunity again to thank you for all you've done. You've understood, and I think you've made many in the administration understand the importance of not letting one of the territories fall apart. In the past, I can tell you, as appropriator, and this chairman happens to be very good at it, and the full committee chairman, at helping us, but the territories are seen as something else. This morning I'm watching one of the major stations, and they're saying, well, Hillary has won this, and Trump has won that, and Bernie has won that. Of course, we're not counting the territories. I say, but why not? They have delegates too, and they gave delegates to the candidates. And that's part of the attitude. We never count the territories.
Congressman, my view and the view of the president is that we're talking about what happens to 3.5 million American citizens, many of whom are veterans, many of whom have served their country, all of whom deserve the same attention that Americans living on the mainland do. And that's how I've approached it in terms of what resources we've put into dealing with it. Before the law was passed, we were working closely with Puerto Rico for quite a period of time, informally advising them, but doing it within the limits of what we could do with an authority that didn't give us the ability to provide them kind of in-place technical advisors. I think that was helpful to them, but frankly, they had a need for more. Since the law was enacted, we have assigned technical advisors, the kinds of people that we use in our international programs in the Office of Technical Assistance, who are very skilled at going into a government, seeing where problems are, helping to design solutions, train people to do the work, and then leave in place an infrastructure that's stronger. As I travel around the world, I cannot tell you how much praise I hear for the work that those folks do. Now, Puerto Rico is part of our country, so this is not an international program. We didn't have the authority to send people into a subdivision of the United States. The law gave us that ability. We now have a team there that's working on a range of issues, including revenue collection, including keeping their books in a way that is more straightforward. And we're looking for opportunities of how to expand it. In general, these are small teams. You go to a foreign country and we'll have 2 or 3 people there, and they do an enormous amount of work. This is something we're dedicating the resources that we need, and we'll find the people as the needs expand. I have a lot of confidence that we will do good constructive work, but I don't want to suggest that technical assistance alone can solve the problem. There is a deep problem in Puerto Rico right now, which is one of insolvency. There is more debt than the Commonwealth can repay. The Commonwealth budget is heavily burdened by debt payments and health care payments, and that's why the proposals we've made on Medicaid reimbursement are so important. The time-critical issue right now is that in May and July, Puerto Rico faces very large bond payments, which they do not appear to us to be able to meet. Action needs to be taken in a timely way so that in the May, June, July period, we don't see a disorderly unwinding of Puerto Rico. Not only will that endanger the well-being of 3.5 million Americans, but it puts at risk all the bondholders who will not benefit if the island doesn't have money to pay back their obligations. So an orderly workout process with an oversight authority is critically important. I appreciate the Speaker's commitment to have action taken in the first quarter of the year. We've been working closely with everyone on this, but the time to act is now.
Well, you partially answered one of my other question, which was within what you're allowed to tell me in public, what you're allowed to tell us in public, what role are you playing in the Speaker's promise, which we know he will hold and keep, to have something ready by the end of March or the beginning of April?
Well, since the end of last year, we have provided technical assistance to any committee of Congress that was looking to deal with the problem, the crisis in Puerto Rico. And I just have to say, the crisis is not a future one, it's a present one. Right now, schools are closing, hospital wings are closing, millions of people are looking at, can they leave the island? It's at a rate that is not sustainable. The economy will just be destroyed if people leave at the rate that they're leaving. And we're providing technical support. We can't write the law. The committees will have to write the law. I certainly hope that the process leads in the next weeks to the kind of process that all stakeholders can trust as being fair. You know, we've never advocated a one-size-fits-all approach. We understand that there are different interests that have to be balanced, but it has to be informed by legislation because there's no structure for the orderly restructuring of Puerto Rico's debt. It doesn't have bankruptcy protection. There's nothing in the contracts that provides for it. This would go through the courts, and it would take 5 or 10 years to be resolved, and in that time, Puerto Rico's economy would just be destroyed.
In closing, Mr. Chairman, just in closing, am I to gather from your information, from what you told us, that there is a sense of urgency on the part of many members of Congress, some who perhaps in the past were not engaged with Puerto Rico in any way, that this is an important issue that has to be dealt with?
I have to say, Congressman, having talked to probably over 100 members of Congress since November on Puerto Rico, the level of urgency that I perceive today is much broader on both sides of the aisle. There is an understanding that these May and June payments are just not manageable. You know, obviously the challenge is getting through the congressional process with something that can get bipartisan support. I hope that that can be achieved in the next few weeks.
Thank you. Thank you, Mr. Chairman.
Thank you. Mr. Yoder is recognized.
Thank you, Mr. Chairman. Mr. Secretary, welcome to the committee. I appreciate your testimony. I certainly appreciated the dialogue you were having with the chairman regarding SIFIs, in particular mutual funds. And I think the point that, you know, I'd like to associate myself with the comments the chairman made and just add to that, you know, you hold, and Secretary and, you know, government regulators hold the power over, you know, 90 million Americans have funds invested in mutual funds. If you got a pension or 401k, this could affect you. And that's a pretty significant impact on a lot of folks' retirements. Wall Street Journal wrote last year that it could have a 25% reduction of your ultimate retirement benefits. I mean, that's huge to knock down someone's retirement benefits by 25%. And you also end up making those mutual funds, which many of us believe aren't banks and aren't going to cause a meltdown, you make them now back up other SIFIs that might actually cause a problem. Now those mutual funds are potentially at risk. So I think one could argue, Mr. Secretary, that you could actually make our constituents' retirement accounts more at risk, not only less. And so I just want to reiterate that.
Congressman, if I could just maybe
please
respond briefly.
Quickly.
We've been working on asset managers for quite a while now in FSOC. We started out by reviewing individual firms. We made the decision that what we really needed to do was look at activities that presented risk. We're continuing that. The SEC has some draft rules out. Our analysis is obviously going to take cognizance of the work that the SEC is doing. But the questions that we have to ask are, is the migration of enormous amounts of financial resources into whether it's mutual funds or hedge funds or other kinds of non-traditional financial institutions creating the kinds of risks that could lead to real financial stability questions? That's the question we're asking.
And I think that's a very appropriate question to ask, and I think many, Wall Street Journal and others, have analyzed that and said the answer is no, and that actually by burdening 90 million Americans with these new regulations and capital requirements potentially, you actually lessen their retirement outcomes, right? So that's a cost that they're going to bear if you go forward.
The financial crisis was not good for people's retirement.
But punishing people that weren't part of it, you know, our constituents.
We're not trying to punish anyone.
Well, it would be.
They don't get punished.
Well, if you punish my constituents by making them have to back up other risky transactions, and their transactions aren't risky, you put them in that same pool. Now 90 million Americans, their retirement accounts are at risk because they're backing up other SIFIs, number one. And number two, the capital requirements then, according to the Wall Street Journal, could reduce their net retirement benefits by 25%. So we can agree to disagree, but I want to make sure.
We don't have a plan, so it's not like I'm sitting here advocating something.
No,
the question is one we have to ask.
Giving you other things to make sure you're taking into consideration. Okay. Mr. Secretary, it's my understanding the Treasury Department has failed to comply with the House Financial Services Committee's May 11, 2015 subpoena for records pertaining to the administration's debt ceiling contingency plan, which records were first requested in December 2013, and the House Financial Services Too Big to Fail investigation, first requested in June 2013. It's my understanding the Treasury Department has also failed to comply with several of the Financial Service Committee's information requests, including those pertaining to FSOC designation processes. Is the Treasury Department withholding subpoenaed and requested records from the Financial Services Committee?
There are conversations going on now, as there always are when there are subpoenas between counsel, and they're trying to work through these issues.
So, Mr. Secretary, you've not denied that you're withholding documents, and so will you?
No, I said we're engaged in a process with the committee.
Will you commit to our committee, to this Financial Services Committee today, to promptly producing all of the subpoenaed and requested records?
As always, there are questions of what is appropriate, and that's what the councils are working through.
So you won't commit to producing all the documents?
Well, we only commit to doing what's appropriate.
Well, part of the requirement is that the committee's requests require you to either, your counsel to either certify that you produced all of the records located, or after conducting a search reasonably calculated to locate all responsive records. Have you and your counsel made the required certification?
I will have to check with counsel where we are right now in the process.
Do you as Secretary, do you intend to ever certify completion?
You know, Congressman, there are conversations going on now, as they always do when there are requests like this and when there are subpoenas. I'm not going to answer a hypothetical.
That's a very direct question. Will you ever respond to the Financial Services Committee's subpoena?
Well, we have discussions going on.
I understand there's discussion. We're having discussion right now, and I'm just asking you a direct question.
The outcome,
can you tell this committee, will you comply?
Based on the outcome of those conversations, we will take appropriate actions.
So you won't tell us whether you'll comply.
Well,
I mean, even if you're not going to comply, you still certify. I mean, when does this end? When will you resolve this issue? I mean, this has been going on since 2015. Some of these requests are 2013. It's very hard for the House and the administration to work together if we can't get cooperation in responding to congressional subpoenas.
Yeah, and
it's very frustrating to the process, and breaks down trust and the ability to do our jobs.
The appropriate place for that conversation to take place is where it's taking place. We are trying to resolve these issues. I certainly am hopeful that we'll be able to resolve them. I just can't respond to a hypothetical.
Well, they're not hypotheticals. They're direct questions, and I wish on behalf of the Financial Services Committee and our efforts to understand these issues that you would comply with these subpoenas and do so in a timely fashion so we can do our job. And I appreciate your testimony. Thank you, Mr. Chairman.
Thank you.
And I think you know we expect you to do that, and we appreciate. Mr. Quigley.
Thank you, Mr. Chairman. Welcome, Secretary Lew.
Good to be here.
Deep breath. In January, Secretary Kerry said that he indicated that if Iran is found to be funding terrorism, they're, quote, going to have a problem in the U.S. Congress. Can you provide an update on Iran's current terror finance apparatus and speak to what the Treasury is doing to monitor and follow up with sanctions on Iran?
So, Congressman, we as you know, have continued to maintain all the non-nuclear sanctions, even after Iran complied with the nuclear agreement. So the sanctions on terrorism, the sanctions on regional destabilization, the sanctions on human rights violations remain in effect. Treasury has the responsibility to implement many of those sanctions, and we have continued to review in each area to identify and designate parties. We've designated a number of parties involved with Hezbollah. We're continuing to look at these activities. As we build a record that warrants designation, we will continue to take actions. The nuclear agreement was very important. It set back Iran's development of a nuclear weapons program, and I think has greatly added to the security of both the United States and the world. But Iran still engages in very malign activities, including support of terrorists. We will continue to find the places where we have the ability to take action. I would just note that even while the most severe nuclear sanctions were in place, it was very difficult to stop the flow of all money to terrorists and to regional destabilization. And we're going to continue to work on it as we did before.
Yeah, I mean, can you evaluate, to the extent you can publicly, the agency's ability to monitor this? It's a complicated world. Iran is elusive.
Well, look, we have an excellent group of intelligence analysts and investigators who I think do just an incredibly good job. They punch way above their weight. They're broadly respected in the national security community for that. They can only operate based on information that they have access to. It's hard information to get. It requires a cooperation with our broader intelligence community, which is very good, very strong. And people work day and night and weekends. They're committed. There's a passion.
Well, I assume that after the Iran deal and the first level of compliance, that there was a lot more work to be done, given the anticipation. It wasn't as much money as most had said that was going to be released or made available because it was tied up and so many other things. But are you gauging more activity after this compliance and the fact that more resources are available to Iran?
Well, actually, very little of the money has flowed back to Iran at this point. It is something that we hear from both Iran and other countries about, that banks around the world are being very slow to respond to requests for money that's freed up. So the pace has not been a rapid one. The amount, as you noted, is much smaller than the kind of headline number, because there's only about $50 billion of the roughly 100 that's theoretically available that could go back to Iran because it's tied up overseas in ways that it can't be released. Iran's own estimate is more like 30 than 50. And very little of that has flowed back at this point. They have enormous domestic needs in Iran. When they talk about resuming oil production at historic levels, they're going to have to spend a huge amount of money rebuilding their infrastructure for them to get back even close to old levels of production. They've been withholding salaries in sensitive areas like military salaries because they've been strapped for cash. All evidence we have is that they're still under enormous financial stress. So I think that the first dollars that go back, there's going to be a lot of domestic demands, so the money won't just flow into malign purposes. But I have to go back to what I said. Even when they were under the most severe nuclear sanctions, they were still finding resources to put in to support terrorism and regional destabilization. So I don't think we can assume that's going to stop. But I don't think it's going to grow to a level that is materially different than where it was, and we're going to do our level best to shut down the way the money flows to support terrorism, as we've been doing over time.
Very good. Thank you. Well, my time has expired. Thank you, Mr. Chairman. Thank you, Mr. Lew.
Before we turn to Mr. Amadei, we've been joined by the chairman of the full committee, Mr. Rogers, and I'd like to ask him if he would like to make a statement.
Thank you, Mr. Chairman. I apologize for being late. We've got simultaneous hearings going on with these subcommittees, and I just left one across the hall. Mr. Secretary, it's good to see you. Good to have you here. And I apologize, Mr. Chairman, again for running late here. Treasury's budget, perhaps more than any other agency, should be viewed through the lens of the President's entire budget request and the state of our nation's economy. As has been highlighted in recent months, deficit reduction and the reduction of our national debt is critical to our long-term economic and national security interests. The annual deficit reached a high-water mark of 1.4 trillion in fiscal year 09, has since fallen to under 439 billion in fiscal 15, largely, I might say, due to the hard work of this committee and this Congress. Since 09, we worked to reduce discretionary spending by around $195 billion. Of note, mandatory outlays, including net interest, has continued to increase significantly during the same time period. If we want to continue to reduce our deficit and chart a course for long-term economic security, we've got to get the mandatory side of the ledger under control. The President's 017 budget request proposes an increase of $2.5 trillion in federal spending and $3.4 trillion in tax increases over the next decade. Unfortunately, once again, there is sadly no leadership in addressing the challenges associated with ballooning mandatory spending. If we were to blindly follow the President down this path, by 2020, our country would spend more money on interest payments on the national debt than we would on protecting and defending our nation. This threatens to squeeze out all of the worthwhile programs that many of our constituents care for, from transportation projects and medical research to housing assistance and homeland security. Mr. Secretary, I hope that you can shed some light on the administration plans to address what I think is a looming crisis. The 017 budget request for Treasury is $13.1 billion. That's a $1.2 billion increase over current levels. The majority of that proposed increase would be utilized by the IRS to implement Obamacare and the Foreign Account Tax Compliance Act for program increases and towards a discretionary cap adjustment. There are a number of issues with this request, but two in particular stand out. First, the bipartisan budget agreement does not allow for a discretionary cap adjustment for the IRS. As you know, that would require a statutory change outside the jurisdiction of this committee. It's been rejected by both the House and Senate budget committees for 5 consecutive years. If the activities funded by the discretionary cap adjustment are important to the administration, then they should operate within the amount allowed under the bipartisan budget agreement. Ms. Secretary, the IRS needs to prioritize its spending like every other federal agency. Second, I'm very disappointed to see that the IRS budget proposal eliminates 3 administrative provisions that have been enacted on a bipartisan basis for several years. Since the IRS targeting and spending scandals, appropriations bills have included prohibitions against targeting U.S. citizens for exercising their First Amendment rights, targeting groups for regulatory scrutiny based on their ideological beliefs, and making videos without advance approval. We're dealing with taxpayers' dollars here, and these provisions lay out what most people would consider common sense policies. Finally, let me end my remarks, Mr. Chairman, on a positive note by thanking you for maintaining the $5 million increase Congress provided last year to the Office of Alcohol and Tobacco Tax and Trade Bureau, as you mentioned, I think, in your earlier statements. This relatively small office at Treasury does great work on behalf of the many distilleries in my state and around the country which support a booming industry nationwide. This additional funding will help reduce the average processing time of distilled spirits labeling applications. So, Mr. Secretary, it's good to have you here. Thank you for being.
Thank you, Chairman Rogers. And now let's turn to Mr. Amadei, and after that, Mr. Ridgel.
Thanks, Mr. Chairman. Mr. Secretary, I want to talk with you just for a minute about the health of community banks and CFPB and all that other sort of stuff. We've never met, so you have no reason to be familiar, but I represent the part of Nevada that isn't Las Vegas, which translates to pretty rural neck of the woods, which translates to community banks, small credit unions, kind of an important part of our financial infrastructure. And I've got some information here that indicates that after the passage of Dodd-Frank, we've had a pretty rapid decline in the number of community banks in the country. And that some of this is attributed to the actions of CFPB, which hasn't, as you know better than I do, the folks that are on that interesting group of folks, but I'm looking at a study here that's by the Harvard Kennedy School, The State and Fate of Community Banking, which was February of last year that it came out, and talks about some of the things they attribute it to, and a lot of the stress they attribute in the industry is to a regulatory one-size-fits-all policy, if you will, that is centered in CFPB. And so you're saying, well, okay, so they're not in touch or whatever, what's the problem, that sort of thing. But yet when you look at the information in the report and who it's attributed to, community banks have lost market share at a rate double that before the Bureau's existence. Information is in the Harvard Kennedy study. Study is based on data provided by the FDIC, whose chairman sits on FSOC. According to CFBP itself, community banks are, quote, a lifeline to hardworking families paying for education, unexpected medical bills, and homes. The loss of FSOC Voting Board, Federal Reserve Board of Governors, the loss of community banks could result in total loss of credit in some rural and small markets. And I'll just do one more. Interpersonal relationships are the backbone of community bank lending, according to all of the above authorities, and CFPB promulgates one-size-fits-all rules that remove the flexibility for community banks and credit unions to use judgment and work with their neighbors on lending. They do this, and this is, I think, the important part, in spite of the fact that community bank default rates hover around 3%, as opposed to larger bank rates of 10%. And so I'm sitting here trying to process all this, and it's like, I guess the first question is, I mean, when FSOC talks about significant economic harm, and you talk about what's happened with community banks, even if you say, well, they're consolidating, it's okay, it's like, hey, that's a trend that for those of us who care about small banking available and other than the major financial centers, that appears to be going on without concern by the institutions that are below you. Tell me how I'm wrong in that analysis.
Congressman, we share the view that community banks are very important to our communities. And I think the history here goes back before the financial crisis. There had been a pattern of consolidation beginning, and it's continued. Some of it has to do with the structure of the industry. I think if you look at the whole range of prudential regulators, they have each taken a view that there shouldn't be a one-size-fits-all approach, that where there are differences that are material because of size, there ought to be a recognition of that, and the flexibility that's built into many of the statutes should be exercised. I think that when it gets to issues of consumer protection, some of them are not size-specific. I mean, to the extent that there is a clear way to put into plain English what a mortgage looks like so people know what they're signing, that doesn't, it's not a big or small bank issue. The capital requirements for small banks, for community banks, are not the same as they are for large institutions. And we have been open to ideas like having less frequent reviews of smaller banks because we do understand that there are differences. I have to say, in all candor, that there are a lot of large financial institutions that kind of present themselves as if they're community banks and they're not. There have been proposals, for example, to change the threshold, for enhanced prudential standards to $500 billion. That's not a small bank, and I think you know that. So we have to really be talking about small banks when we're talking about community banks.
Thank you for that, and I apologize for not managing your time while the same way the chairman is getting ready to manage mine. So I'd like to end it, if I might, Mr. Chairman, is just to say, I would like the ability to return to you outside of the committee process and say, here are some examples of what we think. And some of them may be just communications between CFPB and the others, and kind of get your response to those.
Happy to respond.
Thank you very much, Mr. Chairman. I yield back.
Thank you. Mr. Ridgel.
Thank you, Mr. Chairman. And Secretary Lew, thank you for being here and for your testimony today. I appreciate Chairman Rogers bringing up our overall fiscal condition. It caused me to seek this office about 7.5 years ago, my first, because of my concern about our fiscal trajectory and our condition. And that's what I want to discuss with you briefly here. Let me first say that I believe that both sides have contributed to this. I think the evidence is pretty clear on that. As a fiscal conservative and as a Republican, I believe that we fought for this a lot harder, though. And I want to walk through that just a little bit. If I look at where we are on this growth, about 6 years of growth, our economy is cyclical. We're probably due for some type of correction here in the future. And then interest rates, I'm convinced, can only go one way. They can only go up. And all of this is really troubling to me. I think the consequences of us not addressing this are far more severe than I think most leaders in Washington. And I don't say that with any hubris, like I've got some special insight into it. In fact, I hope I'm wrong on all of this. But the evidence, I think, doesn't point to that. Here's a quote by then Senator Obama in 2006, "America has a debt problem and a failure of leadership." Now, I mention that because I'm mindful of the feeling that I had when I left the State of the Union address not long ago, and I thought about what he didn't say. He didn't really address our fiscal situation. I think he's failed to grasp our fiscal situation. I don't say that in a partisan way. He's my president right now, right? And I was really disappointed in my president. I don't think history is going to be kind to us. And I'm going to give you time to respond to this, and maybe you can tell me, Congressman Ridgel, it's not as bad as you think it is. I'm not sure how you can work through that, though, because every trend is going the wrong direction. And I'm convinced that your administration, the administration, and I'd respectfully submit that you as Secretary of the Treasury have a duty to raise the alarm level here and put a sense of urgency about this. And I want to give you some time to respond. And thank you for being here.
Congressman, I think the economy is in far better shape than you've just described. I think that we're seeing very strong consumer demand. We're seeing housing come back. We're seeing job growth at very sustained, strong levels. We have a lot more work to do. But when it comes to our fiscal condition, you cannot compare where we are today to where we were 7 years ago. When we had a financial crisis and a recession driving the deficit after a period of just building it up through policy decisions, and we've reduced the deficit from 10 to 2.5%.
Let me say this, and I only cut you off because our time is so limited. Every administration official that's testified here, at least the ones that I've heard, there's always a backward-looking. And look, let's just even say hypothetically, let's just say I agree with that.
So I was going to go forward.
What I'm not seeing is this really fighting for mandatory spending reform. It's just not happening. It just isn't.
Congressman, if you look at the trajectory under our budget, even under the baseline for the next 10 years, we've restored stability to a situation that was out of control. There is much more policy that needs to be discussed. It's not all mandatory spending. There's tax issues as well. We've done a lot to reduce the deficit. We've reduced discretionary spending. We've solved some of the tax problems, though not all of them. And while I know we don't agree on the Affordable Care Act, through the Affordable Care Act, we reduced spending on health care programs. So we've done a lot over these 7 years.
Well,
we now have a foundation to work together. If we could get into a space for a bipartisan conversation like we had in the 90s, perhaps we can
well, part
make
of this
more progress.
the president has got to lead and make the case with every American that for us to get out of this, that there has to be the thoughtful and substantive reform on the mandatory side. I'm not seeing it. Look, I had an opportunity to speak to him once privately. I did. He said, Scott, what's on your mind? I said, Mr. President, we're not doing enough on this. We're not doing right by our children, and he's not fighting for it. I just haven't seen it. And I know that the clock's ticking on the administration's time, but I would implore you, just as a fellow American, to make this case, because if we don't, we get on the flip side of debt, and we're about there right now, and then your lender starts telling you what to do. I thank you, and out of respect for my chairman, I think I'll yield back. But thank you, Mr. Chairman.
If I could just take 30 seconds. I've spent most of my professional life trying to point this country in the right direction on a fiscal path. I presided over 3 surplus budgets. No other living budget director, no past budget director can say that. I understand the importance in the right time of having a balanced budget. Right now, if you ask me what's the most critical thing for the economic future of this country, it would be getting a bipartisan consensus on things like building infrastructure, dealing with immigration reform, doing the things that would build the foundation of our economy. Those are immediate pressing needs. I actually think we have some time to deal with these other issues. Certainly, there's more work to do on the entitlement side. There's more work to do on the tax side. I think we've gone too far on the appropriation side. It was meant to trigger action on the other issues. It's incrementally had that effect. That's how we got an agreement last year and 2 years ago. So I think if you look at where we've come over the last 5 years, in pieces, we've put together many of the elements of what was once called a grand bargain with more work to do. And we do have more work to do, but I think we're in a very strong place going forward.
I thank you for your testimony. I thank the chairman for being giving you that extra time. Thank you.
Thank you.
Thank you. And now I'd like to recognize Ms. Herrera Butler, and we're glad to see you back. Your smiling face. She's been dealing with some family health issues, and we welcome you, and please proceed.
Thank you, Mr. Chairman. It's good to be back. And everything's going well at home, so it's exciting to get to come back and be a part of this hearing this morning, although I will tell you, some of these issues seem like repeats, like a little bit like Groundhog's Day. I'm going to switch gears a little bit and see if I can't break myself out of the Groundhog Day feel. Thank you, Mr. Secretary, for coming. A number of my colleagues have written you, and Ambassador Frumman. Thank you. I have had my coffee, about concerns relating to the data localization provisions of TPP that exclude the financial services industry. And I know you've commented on this. I understand you're working with the trade representative, regulators in the industry on the issue, and I just wanted to see if you could update the committee on what your efforts are.
I'm happy to. Data localization is something that, as a general principle, we have opposed in trade agreements. In things like electronic payments, I put an enormous effort into making sure there were not data localization provisions, because it was pure and simple a trade barrier. It was either making it more expensive for a firm from the United States to do business there, or it was a way to create local jobs, but it wasn't appropriate. In the case of financial services and prudential regulation, there is a very difficult issue, and it's one that I think there's a reason to be cautious on. That is that prudential regulators need access to information in a timely way, and our experience has been that there have been moments, particularly moments of crisis, when prudential regulators couldn't get the information they needed from international sources. Because we have a principled position that data localization in general is bad, we're working to see if there's a way to thread this needle to make sure that the prudential concerns can be addressed without having it become something that could become a real problem for financial services companies. It's a hard needle to thread. The regulators are focused on it. We're trying to find a pathway there, and I've put a fair amount of my own effort into trying to make sure that it's taken very seriously.
So you think we could be somewhat close to reaching?
So I think first we have to separate TPP from kind of future policy. TPP is locked, and what you can do to change TPP obviously is very limited. There's the possibility of having some kind of side agreement, but I don't want to exaggerate what can be done with the 11 countries in TPP. We're looking to see, is there something particularly going forward that would inform future discussions on things like TTIP and any other binational trade agreements. And that's where the vast number of countries would come into play. It is a complicated issue, so I'm going to be cautious rather than being overly optimistic. But I can tell you that I've gotten the attention of all the regulators. They're looking at this. They're trying to find a way to thread the needle. And we're going to do the very best we can to work it through.
Good, thank you. Switching again, recognizing the importance of protecting the financial services sector from cyber attack, which is a tall task. Do you agree there should be a coordinated approach among the regulatory agencies and key stakeholders to cybersecurity regulation across the financial services sector? Because what we're seeing is in siloed efforts, everybody's coming up with their own solution, and with technology, that's not going to work. So I'd like your comment.
Well, I actually don't think that it's true that they're all coming up with their own solution. There's been a broad embrace of the NIST standards as being best practice, and there's a lot of coordination and discussion not to have conflicting standards. I think where the question comes up is each prudential regulator has its own supervisory approach, and how you take the standards and apply them in a supervisory context is something that is historically a challenge to coordinate because each has slightly different parameters. There's conversations going on to try and do as much as can be done to deconflict there. I've asked my Deputy Secretary, Sarah Bloom Raskin, to take the lead for Treasury, coordinating these cyber issues across the department. She's put an enormous amount of time and energy into working both within the department, where we have very substantial concerns, but also across the regulatory community, where we get very senior level participation in these coordinating meetings. And we now have legislation that gives us the ability to work more with the community outside the private sector. So it is a concern that we share. I can't tell you that there will be no differences between how different prudential regulators do their oversight of banks, but there is very much an attempt to get best practices.
So it seems like you're saying that they're going to approach it from a different side, or from the oversight position. It's not that they're going to talk about creating their own standards. Is that the clarification?
That's certainly where the goal is, to have as close to single standards as possible. We don't get to impose on prudential regulators their standards. It's really what they do by reference to a single standard like the NIST standard.
Got it. Got it.
It's a serious question, and
I think some of my challenges is we have heard like whether it's futures trading or whether it's the standards, we've heard talk of different actual standards, not we're going to approach our the way we administer it differently. And as you can imagine, it's hard enough in industry, but if the federal government can't within one agency have the same standards, we're going to have challenges.
Part of the challenge is there's not a one-size-fits-all approach because different platforms have different characteristics and requirements. So I think there will be inherent differences. The question is, do they all reference back to the same kind of core principles, which I believe they do. And if they don't, we need to keep working on it. There will be differences. Securities and banks have different systems because they do different things. So I don't want to suggest that we would have some arbitrary one-size-fits-all approach that wouldn't make sense. But the goal is to have as little conflict as possible.
Thank you. I yield back.
Thank you. Mr. Graves.
Hey, Mr. Chairman, Ms. Secretary, good to see you. Thank you for appearing before us. We're always grateful for your thoughtful and thought-provoking responses each and every time. I have about 6 questions. Most of them are very redundant, and I suspect your responses may be redundant as well, but that's okay. I think it's important for the record. Following up on Mr. Yoder's thoughts as well, and our role as being providing some accountability and assisting the Financial Services Committee as well in some of their responsibilities. Could you just answer for us, why are you withholding subpoenaed internal Treasury records pertaining to the administration's debt ceiling contingency plans?
So again, as I responded earlier, we have conversations going on with the committee, our counsel and their counsel, and we're hoping to continuing to hope to resolve these issues.
Okay, thank you. And then the same, why are you withholding subpoenaed records pertaining to the Financial Services Committee's too big to jail investigation?
So I don't want to pretend to be deeply familiar with every request. I have to get back to you on that.
Okay.
I mean, our general approach is always to work with the committee and try and find an appropriate accommodation, but I'll check on that.
Okay, and thank you. And very similar, why are you withholding the records the committee has requested pertaining to the processes the FSOC uses to designate and redesignate and de-designate non-bank financial institutions as systematically important financial institutions?
Well, obviously, I've testified widely on the subject, including here this morning, and we work with the committees to try and provide appropriate information.
Thank you. And then one other, on what legal basis, and this is maybe just sort of bringing it to an end, what legal basis are you withholding these records from the Financial Services Committee?
So I'm really going to have to just say we're leaving these discussions to the appropriate conversation between lawyers.
I understand. And then one other related, on what legal basis of withholding the subpoena records relating to the $5 billion in unlawful payments to insurance companies has been requested by the Ways and Means Committee?
I'm sorry, I didn't understand that last question.
On what legal basis have you been withholding subpoenaed request or records relating to the $5 billion in unlawful payments to insurance companies as requested by the Ways and Means Committee 1 year ago?
So, Congressman, all of these requests are going through a process where lawyers are working through them. I'll have to check on that specific request. I haven't looked at it recently.
I understand, and I just had a duty to ask those questions,
Yeah.
and I know you have a response there and a duty to respond as you have. And I guess for this committee's sake, just trying to help us understand, what are the consequences of noncompliance or non-response to subpoenaed requests by standing committees of the House of Representatives?
Look, I have always endeavored in my many decades of doing this to try and be responsive and to reach an accommodation that gives committees material that's appropriate. There are some materials that are not appropriate to be provided for a variety of reasons. It depends on what the particular material is, so that's why I'm avoiding giving an answer that would be very general.
But is there a consequence to the agency, to you as secretary, or to the agency if you just choose never to respond? And this is a fair question.
I think congressional oversight is an important function. We endeavor to provide appropriate information to support congressional oversight, and we certainly look for a relationship of comity with the committees that we deal with. So we always endeavor to work through these issues. Sometimes there's a request for information that is not appropriate to provide. And we have, in the past, always been able to work through those issues. Obviously, Congress has some remedies of its own, and then there are issues of privilege that can sometimes be invoked, but it always depends on the circumstances, so there's not a general answer.
I understand. And so just, let me point out to the committee here that many of these subpoenaed requests of records have been 1 year, 2 year, if not almost 3 years in the waiting from the Secretary and his associates, and the discussions, I guess, have been ongoing for that long as well. And but one of the remedies to this as a committee, I would hope, is that we take this into consideration, that duly elected and appointed committees of the House of Representatives have rightfully asked for records and have been denied those. Because discussions are ongoing, but as we consider the request by the Secretary, I hope we take that into consideration. Thank you, Mr. Chairman.
Thank you. Now I'd like to turn to Chairman Rogers for a question or two.
Mr. Secretary, since we divided off Secret Service into Homeland Security, does your department retain any concerns about counterfeiting, or is that solely with the Secret Service?
We have very much direct responsibility. We and the Fed together work on the design of our currency to make sure that it's as difficult as possible to counterfeit. That's where the technology comes in. We work with the Secret Service, who do the principal investigation when there are counterfeiting events. I think it's at the highest level of importance that we maintain the integrity of our currency, and we put all the attention that it requires into it.
Well, I should ask this of the Secret Service, and I will, but I was recently, last week, in Peru, the counterfeiting capital of the world, I'm told.
I wish it were only one.
Yeah. But anyway, it's apparently it's wholesale, big time there. We've only got one person there that I'm told to work with the Peruvian government to try to stop it. But could you check into that?
I'm happy to, Mr. Chairman. I mean, obviously, when the Secret Service was under the Treasury Department, we had more direct accountability for their resources, and they do the investigation. I can tell you that we are trying to stay ahead of counterfeiters as we look at the next generation of currency. We're looking at new kinds of technology that will make it even harder to counterfeit. And we obviously are going to have to stay a step ahead because it's a world where counterfeiters
Peru
are out there.
apparently is the real hot spot, and I hope that you could work with Secret Service to get some more effort going there. With the people.
I'll follow up on that.
Yeah, thank you. Quickly, Bitcoin. The Office of Terrorism Financing and Intelligence within your department is the only federal agency solely devoted to tracking and disrupting the financial means of our enemies for the purpose of ultimately defeating them. And the head of that office said last year, what keeps me up at night when I'm thinking about digital currency, the real threats out there these days, we're thinking a lot about ISIS. And the use of digital currencies, Bitcoin, to be used by groups like ISIS, it seems to me to be a real threat. It's an unregulated form of online currency, circumvents the traditional banking system, is on the government's radar since it could serve as an ideal placeholder for terrorist assets and provide a way for terrorists to exchange money. The Bitcoin website, bitcoin.org, describes the ease with which anyone can send and receive virtual funds. I quote it, "Sending Bitcoins across borders is as easy as sending them across the street. There are no banks to make you wait 3 business days, no extra fees for making an international transfer, and no special limitations on the minimum or maximum amount you can spend, you can send. It's the first worldwide decentralized currency, can be sent person to person without any third-party involvement, and can be used by groups like ISIS to spread their evil worldwide." What do you think about it?
So, Congressman, we obviously are looking at many ways that ISIL get money, and we're trying to shut down every path that we can identify. Let me take a more general approach to the question of Bitcoin. It is in that area of financial technology that captures people's imagination because it has the possibility of creating easier ways to do business in the future. We have from the start said that we don't want to be anti-technology. The things that will create the right platforms for the 21st century will come out of disruptively changing ideas. On the other hand, we have to hold a new system, a new platform like Bitcoin to the same standards we hold traditional financial products. We track cash because cash can be used anonymously to support illegal or malign activities. And our FinCEN, which is part of TFI, right from the beginning laid out criteria that we need to keep an eye on what's going on in Bitcoin, that is fully consistent with the way we approach both formal banking and cash. It's challenging, and I'm not going to suggest that there aren't threats there. There are real threats there, but our team is on top of it, and I think very much looking to see what do we need to do to make sure that it doesn't become a funding stream to support bad actors. With regard to ISIL, we have taken dramatic actions to try and shut down formal banking, an area that they control, working with the government of Iraq. We have taken military action to set back their ability to generate revenue through oil development and shipping. And we've worked to shut down the flow of salaries into territories they control. So we're doing everything we can. They're stressed. You can see it in the fact that they're having trouble paying their soldiers, but that's not good enough. We have to keep at it until we really dial back their ability to promote the kind of terror that they're all about.
Well, you're exactly right, and your department is the leading edge of that effort on the financial strangulation of these organizations. So we wish you well and urge you on.
Thank you. And, you know, we, in just December, had a meeting at the UN Security Council, the first time in the history of the Security Council that finance ministers met in the Security Council. I chaired the meeting because it was our presidency, and we unanimously passed a resolution to treat ISIL the same way we treat al-Qaeda and to get the whole world to say they're going to cooperate. A lot of countries don't have the kind of resources that we have in TFI. One of the things we have to do is help them build that, and our technology assistance and technical assistance program and working with international organizations to do that is part of what this is about.
Thank you.
Thank you, Mr. Chairman.
Thank you, Mr. Chairman. We've got a few minutes left. I have a couple more questions. I think Mr. Serrano might. So let me ask you, Mr. Secretary. You know, I mentioned in my opening statement about the lack of liquidity question, and after the crisis, an awful lot of new rules and regulations were put into effect, and I've always had a concern that they might somehow impact this liquidity issue that deals with our economy. A lot of other people have that same concern, and just recently, I think a couple of members of the Fed said they believe there's a linkage between the post-crisis regulatory framework and liquidity. And so I guess my first question is, do you think that was by design, or do you think that was an unintended consequence?
Well, first, I want to go back to first principles. I'm not sure that the linkage is as clear as some people have argued that it is. We're at a time of an inflection point in many ways in the economy. You know, we're leaving a period of historically low interest rates and low volatility. You know, we're seeing markets evolve in a way that there are more and more non-traditional and electronic participants in the market with huge volumes. We've also seen corporate bond issuance surge in recent years, and there's been quite rapid growth of the asset management industry. So there's a lot changing in the financial landscape. Now, on top of that, we have had new regulatory requirements put in place, and I've said before that we will continue to look at, are there unintended consequences there? I think that many have jumped prematurely to a conclusion that that's the case. I'll give you an example. When there was the round trip on October 15th, a year and a half ago, where the market went up and down very quickly, for weeks, people were saying that was a result of liquidity caused by regulation. We went back and did very careful analysis. We had all the different regulators who had different pieces of visibility work together. And that's not the conclusion that you reach when you study the data. You see that there were very dramatic moves in high-frequency trading that had a distorting effect. You're seeing things happen which I don't have the full explanation for, but in asset management funds closing positions at the end of the day algorithmically. So there's a lot going on. What we've done through financial reform is we've put a foundation that's solid underneath our financial system. So right now, when you have a period like January and February with volatile markets, there was a lot of confidence in the integrity of the U.S. financial system. That's of enormous benefit. So we have to keep an eye on whether there are spillover effects. To the extent that there's a lack of liquidity for high-risk products, that's different than if there's a more general liquidity issue for, for prime corporates.
I mean, that's really what I'm talking about. I'm not, wild market fluctuations. You hear Mr. Amade talk about the community banks going out of business. Yeah. Most people, maybe not everybody, but if you got people on the Fed, you got people saying, look, I think there's a linkage here when you've got all this new regulation, and clearly there's a little bit of lack of liquidity just in the everyday business startups, things like that. Now, and you might say, well, I don't see the linkage, and I don't.
And there are also different ways of defining liquidity.
Exactly, and that's what I was going to ask you, because if you don't think that there really is impact, maybe you said you've done some studies, as I mentioned in my opening statement, we asked the SEC to kind of do a study, and they might coordinate with you, but it'd be interesting to see what the results of a more formal study would produce in terms of lack of liquidity. But so you would say, A, I'm not sure that there's a linkage, and B, then you would certainly say,
I'm not dismissing the question.
Yeah, no, but you don't think anybody sat in a room and said, look, if we do all this new regulations, we can kind of take some liquidity out of the market. Nobody thought.
I don't think as a general proposition that was the case. There were some things during the pre-crisis period. One could argue there was too much liquidity in some high-risk markets. There was over-leverage. But that's not what you're asking about.
No. Yeah. But what would you, when you all sit down and talk about liquidity, what would you argue is the right mix of liquidity?
So look, I think that in terms of markets, the question is, can you match up buyers and sellers in real time for securities, for stocks and bonds?
But also in business startups, small banks, all the lending that it seems to me you hear a lot. These community banks are all going out of business. They're big banks are getting bigger, but it's harder and harder for somebody to go start a business or buy a home. It seems to me that has some sort of impact, and maybe that's at a lower level than you look at.
No, we look very much, particularly at home ownership. I've said many times that the credit box shrunk more than regulators meant for it to. You look at what banks are doing; they're not operating at the outer limits of what regulators, think is a comfortable place to lend. You look at the FICO scores for loans; they're too high. Where you kind of gap out and you can't get mortgages. FHA is looking at some things that they can do to try and provide some clarity there. I believe they may have even put out something this week. So those issues are very much in our focus. That's different than a broad question of market liquidity. So it is important to define what it is, which piece you're talking about.
Well, I'm glad to hear you say that it would seem fairly obvious that you're concerned about liquidity in the market, and
I think credit-worthy individuals and businesses should have access to credit.
Exactly, and you want to, but you also, I think we all want to say, we want reasonable regulation, but we want to be careful that if too much regulation creates problems, then we want to be sensitive of that. Not enough regulation also creates problems. But there's a balance somewhere.
And there's some issues that have arisen in terms of how legal matters are resolved, the aftermath, and the de-risking that is taking place in the financial sector, where we're seeing financial businesses withdraw from areas that they're just deciding are not worth being in because they see risk and they don't see a lot of benefit. We're putting a lot of attention into that. Frankly, whether it's individuals in the United States or countries that we want to have commercial relationships with the United States, we're not in a better place if people and countries are cut out of the formal financial system. But firms do have to have an idea of what do they need to do to comply reasonably with all of the standards that are out there. That's something we're putting a great deal of effort into in our last year.
Thank you. Thank you. Mr. Serrano?
Secretary, the President's announcements on Cuba and Cuba travel have been met with great support from a lot of people, and I'm happy to see that the outcry we all expected from 10 years ago didn't take place. What have you seen as changes affecting what you have to do? What needs to be done still? And can you talk to us about the new announcement that was made just yesterday?
Congressman, we have, as recently as yesterday, taken a series of actions to try, within the fairly tight boundaries of law, open up more contact between the American people and the Cuban people, to create a basis for driving change in Cuba by having the influence that we have when people get to know us and our values and our standards. Yesterday we eased up on some travel restrictions, we eased up on some financing restrictions. We've done everything consistent with the laws that, as I say, circumscribe how much we can do. So I wouldn't describe where we are as normal commercial relations, normal in any way. We're seeing an increase in activity. That's a good thing. I believe that if you look at the history of the last 50 years, it hasn't worked. Cutting Cuba off hasn't worked. It's put us at odds with most countries in our own hemisphere, and it's left the Cuban people cut off. The most positive thing we can do is demonstrate by our example what it is our values are, to have the freedom of business and the freedom of ideas start seeping into a system that has not seen that kind of freedom. So I don't think there's a disagreement between us and those who oppose our policies on the fact that there's a need for change in Cuba. There's a difference in what we think are the effective means to accomplish that. And I think the history does prove that the path we've taken hasn't worked. We believe the path that we're embarked on now, subject to the limitations of an embargo and a Libertad Act and all kinds of restrictions, is going to help. With changes of law, it could be done in a much more normal way.
Right. I'm trying to remember who it was, and I can't at this moment, but someone before this committee told us that the biggest change they saw was when the president went to Latin America and he was meeting with a group of leaders from Latin America. Was that you that told us?
Well, I may have. It happened. It happens to him.
The point was how excited they were.
It happened to him. It happens to me on a regular basis when I interact with my counterparts from Latin America. This has been an issue where they've had to be at odds with us, and they're not at odds with us as much or even at all because of the changes. I think it's a good thing for the U.S. to be a leader in our hemisphere, and part of being a leader is figuring out how to address issues like this. There's a lot that needs to change in Cuba, so nothing about this policy embraces practices that need to change. It's really a question of what's the most effective way to accomplish that change, and I think our leadership role in the world and the Western Hemisphere is very important as well.
One last question. One of my favorite programs is the CDFI program, and we noticed that you asked for a relatively small increase compared with some of the other numbers that we've discussed today. I hope we're not putting them at risk in any way, because that's an agency that has been very effective in my community, and I'm sure it's been effective. It has a lot of fans on both sides of the aisle.
Urban and rural.
Yeah.
I'm a big fan of the CDFI program. I feel like I was present at the creation in the 1990s. I've tried to, in my period of time at Treasury, nurture it and help it to grow. We've tried to be responsive in areas like the Bank Enterprise Award Program and request a funding level for that important program. I think we've requested a level of funding that will give CDFI the ability to grow and to do well. Something that we did last year that is very important is we worked to have credit unions qualify as CDFIs, tremendously expanding the base of institutions that are eligible for participation. As I've traveled around the country and visited CDFIs, one of the things that's been striking to me is that it's not just the direct activities that we fund. We create anchors to bring together a variety of federal services, local services, to coordinate an economic development engine in a community to help young people find training and jobs. You have to have an anchor. And a lot of these communities, the CDFI-funded organization can be that anchor.
Well, they've done a great job. And let me just in closing say that this will be the last time you come before us, I think, in an official capacity. We'll keep talking about different issues and working on Puerto Rico and so on. I want to thank you for your service. And
Thank you, Congressman.
like I said, I didn't win any primaries for president, so I can't reappoint you. But I would have loved to do that. And if you come back to the Bronx, as you stated before, we welcome you again, as always. That's your home.
I vote in the Bronx. I pay taxes in the Bronx. I look forward to living there again.
Okay. Thank you.
I think Mr. Yoder has another question
Thank
or
you,
two.
Mr. Chairman. Mr. Secretary, Treasury and other agencies recently put out a broad request for information on the changing structure of the market for U.S. Treasury securities. This comes on the heels of a joint report on the October 2014 flash rally and numerous public discussions on the changing profile of the market in terms of participants and overall structure. Are there particular areas within the market where Treasury is particularly focused and concerned that either new structures or new participants may be impacting the overall efficiency and liquidity of this important and unique market?
Yeah, thank you for the question. I while you were out, addressed it, so I apologize for repeating. But on, if you look at the report we did on October 15th and the request for information, it outlines the kinds of questions that we have. These are questions. We don't have certainty about what the answers are, and it's quite an important process. What we've seen is a change in where the level of activity is by kind of firm, kind of activity. The amount of activity that is hard to get out, algorithmically generated, high-frequency trading, for example, it's a very large part of the market. We're also seeing that funds that move large amounts of securities have activities at the open of the day, the close of the day, that have patterns that seem to be having potentially some impact. This is important to understand because this is the plumbing of our financial markets. And if the system is changing, we have to ask, are the things that we've done in the past to make sure you maintain an orderly market, liquidity, all appropriate and working? So we don't start out with an idea that there's something like bad that needs to be addressed. We start out with a very complicated evolution of our financial markets that needs to be fully understood. And I think Treasury has a responsibility for driving that kind of questioning, which is why we have the RFI out there. I very much look forward to the responses to it. And this is not a case where we are starting out with an answer and looking for a record to support it. This is saying we've now observed a lot of things that suggest there's been dramatic change in the structure of the market. We need to understand that in order to know how to respond.
Appreciate your answer. I would be remiss if I didn't take a moment to talk about the budget a little bit. I know there's been extensive testimony and we have differences as parties about this, but numbers are numbers. Do you know what the projected debt is under the current budget projections for the next decade, an additional debt?
Yeah, I haven't added it up, but I know that we have reduced the growth rate of the debt.
I respect that. Rather than, I know, and we have a debate about what we've done. And
we can get back to you with the
yeah, but I mean, just a basic, surely you're the Secretary of the Treasury, what's the projected debt over the next 10 years? I know you know this answer.
I walk around with a lot of numbers in my head.
You don't know the answer to that question?
I don't have the number in my head.
Come on.
I mean, I know that we've reduced the annual accumulation of debt to a level that is sustainable.
With all due respect, Mr. Secretary, I know that's the sort of company answer, and I respect that that's what you got to go with, but I want to have a discussion.
As in virtue of being true.
I want to have a discussion about where we're going, not a debate about the past.
There's no doubt that the debt will continue to...
Our projections, I think your projections, since you're not coming forth with it, the debt's going to continue to grow. The deficit's continue to grow. You agree with that, right?
It definitely grows.
Would you say $7 or $8 trillion over the next decade?
Obviously, GDP is very large and growing. So if your debt as a percentage of GDP is either flat, it's going to grow by a large number.
Fair discussion.
But the question is, what is it as a percentage of GDP? Is it sustainable?
Right. So do you know that answer?
It stays in the 70s, which is higher than it was, but it's not at a record level. And we have long-term challenges ahead of us, but we're not looking at it breaking through a level that is a crisis level.
And I appreciate that you know the debt to GDP ratio, but you don't know the total debt number. Going forward, I think we have concerns about the solvency of Medicare. Your own folks the Medicare trustees have concerns about the solvency of Medicare, and I know we're going to talk about how we made it better, and we have. in some
have more
regards.
work to do.
But we have more work to do.
Absolutely.
10,000 seniors retire every day. My grandmother's 104, right? We have longevity. These are great
Wish
things.
her a healthy and long life.
Thank you
She's
very
had
much.
a long
I'll pass that on to her. Thank you. 105 in June. But the question, I guess, for you, I'll just give you 30 seconds here. You oversaw a balanced budget in the 90s, Republican House and Senate, Democratic president, bipartisan, workings together on that. If you could balance this budget over the next 10 years, what would you recommend?
Well, I think that the time to balance a budget is not now, because I think we've.
I mean, over the next 10 years,
Yeah,
over the future. Like, how would
there's a reason that we didn't present a balanced budget in the 10-year window. Coming out of the deep recession, we have other much more immediate challenges that I think we'd help our economy if we dealt with. If you gave me a choice of balancing the budget or rebuilding our infrastructure, it's a more immediate challenge to rebuild our infrastructure. The ability of our economy to meet the needs of the 21st century is going to be undermined if we don't do that. We have a bit of time to deal with entitlement spending and to deal with taxes in a bipartisan way. Look, I've been part of bipartisan budget deals over a period of 4 decades. The right way to do this is through a bipartisan conversation where we agree on the need to protect senior citizens, where we agree on the need to have a fair and more simple tax system, and where we have an honest discussion about what the trade-offs are. The last few years have not given rise to the kind of grand bargain, but over a period of years, we've taken incremental steps that have gotten us a long way there. We went a little too hard on discretionary spending. I thought so at the time, and now I think things like the budget agreement put some mandatory savings in to back out some of the discretionary savings. We did the Affordable Care Act, which did reduce our health care spending dramatically, and we did raise taxes, which we thought was necessary on the people who are most able to pay. That doesn't mean we've done it all, but we've done a lot over the last 7 years, and I think there's more to do. I hope that my successor is able to work in an environment where there can be the kind of bipartisan discussion that, frankly, I've tried very hard to foster and have enjoyed being part of in the past.
I think invariably this conversation, when we had OMB director in as well, turns to a discussion about what the administration's done. And I think Congress and the administration both have an obligation to engage in adult conversations, and you outlined the premise by which that would occur in terms of bipartisan discussions, protecting Medicare for seniors, reforming and flattening out this tax code. I mean, the principles are there, and I just throw out for the sake of conversation, it's March, we have, about a year. I'd love to see, the administration lead those efforts and see, while you're secretary and while we're here, working in the current framework, why not try to address some of these long-term problems now? Because I think you agree that the longer we wait to address them, the harder they will be and the more difficult it'll be for your successor and for ours. And so I've got young girls, we all have children.
I have young grandchildren.
Yeah, so I think you should be, I know you're as concerned about this as we are, and so I just offer that I'm ready to engage. I think we're all ready to engage.
I've always been ready to engage. I would say that on the tax side, if we could figure out a way to work together to stop inversions, that's something that the American people are offended by on the Democratic and the Republican side alike. We find it wrong, and we know how to stop it. I hope we can at least come together on that.
Mr. Chairman?
Yeah, we can fix the tax code. That's the way we'll stop it. Right, go ahead. But I have a question, but you have a comment?
Just a quick comment. I really respect the gentleman's comments about balancing the budget. I think that's so important and something everybody wants, and so on and so forth. The secretary has made it clear that sometimes, you get into a little debt by building highways, and you create 1 million jobs at the same time, and it's something you should look at. But, I've been around here long enough to remember when we cut taxes, when we weren't supposed to cut taxes, and when we got into a war we weren't supposed to get into. We had a surplus, and then we blew the money away, along with a lot of our respect throughout the world. We're still looking for those weapons of mass destruction, but they cost billions of dollars. So I think if we learn anything from that is to be careful about the future, protect our country, try to give the working class and people in this country, less of a tax burden. But we made some serious mistakes at that time, and we're all guilty of it. We cut taxes when we shouldn't have, and we threw away a surplus on a war that we shouldn't have been involved in. And now we hear the gentleman speak honestly, but I think we have to revisit that every so often to remember how we got into this mess. Thank you.
Let me ask one final question, Mr. Secretary, about mandatory spending, because I know, like, your agency has a lot of bureaus that are funded through the mandatory. They're outside the appropriations process, and I understand that FSOC, which we talked a lot about, they have they're going to have a 23% increase in their budget. And so I wanted to ask you why you think that is. But in a broader sense, I read a report that said this new Consumer Financial Protection Bureau, they did an independent performance audit, and they recommended that they expand their transparency of their funding and their expenditures, which kind of brings up that broader question about these agencies that aren't under the appropriations process. You know, how much scrutiny goes into those budgets. For instance, it used to be the OMB director, and I wonder, in those days, how much attention did you pay, or does the OMB today pay to some of those agencies that are funded outside the appropriations process? What kind of critical review do they get? Can you talk a little bit about that? Because I think that's a concern to everybody. And for instance, that 23% increase, you say, well, tell us about that. But in general, since they're not under the process that the public sees in every other agency, are you comfortable with the amount of scrutiny they get before they spend the dollars that they spend, even though they're mandatory?
Congressman, with regard to FSOC and OFR, they're funded through the Financial Research Fund, which was established as part of Dodd-Frank as a permanent source of funding. As part of each budget cycle, OFR and FSOC provide the public with detailed information that justifies, excuse me, planned expenditures during the upcoming year. And the Financial Research Fund is subject to appropriate internal controls and has been subject to periodic audits. You know, I think it's important to have these independent regulatory activities funded the way they're funded. That's been a tradition with bank regulators. And I also think it's important that they provide the public with detailed information that shows how they're using the money. And then we look forward to working with you to make sure that that happens.
Great. Well, thank you very much. And I think Mr. Graves has no more questions. Again, I want to thank you personally for your long career in government, and not that you're going away. I know you're going to the Bronx. You may come back. But thank you for your service to the country. Thank you for working with us, and we look forward to continue to work together to make things better in this country. So, again, thank you so much.
And thank you for the cooperative way with which you've worked with the Treasury Department to start meeting some of these very important needs.
Thank you. This meeting is adjourned.